Shares of Mattel up more than 15% this week after better than expected results in the third quarter. Thanks, Ron, to, of course, Barbie. It's always Barbie. Barbie's always getting it done for Mattel.
You know, it's actually interesting. Most of the strong sales were international, especially in Asia, lifted by sales of dolls based on Korean boy band BTS. And I must admit, I've never heard of BTS, but...
You're not the target demo.
Oh, good point. But you know what? Call me nostalgic, but it was nice to see Barbie up 10% and Hot Wheels up 25%. That kids are still playing with toys. That kind of sounded nice to me. There was some weakness. Their infant, toddler, and preschool division were weak, and that offset some of the strength. So revenues were only up 3.1%, but it was still significantly better than expected. You got some widening margins due to cost cutting, which led to an adjusted earnings per share increase of 44%, which is a really strong number for a company that has kind of had a tough road of late. Relatively new CEO has done a pretty good job of stabilizing that core doll business, and then also kind of moving into entertainment with feature-length films and shows and amusement parks, a lot of what Hasbro is doing as well. Interestingly, they saw no impact from tariffs, whereas Hasbro spent a significant amount of time focusing on the impacts that tariffs had on their business for the quarter. So that's kind of an interesting difference.
The story with Mattel is one that we've seen play out with different companies in different industries. And by that, I mean you've got several divisions. One of them continues to deliver quarter after quarter, and maybe another doesn't get it done quarter after quarter. Yum Brands, certainly with Pizza Hut, that's been the story for literally years now. When you see a business like that, does part of you want to have, the activist investor part of your history kick in and really urge them to either double down on what's working or just cut their losses with another division?
Absolutely. If you see a division consistently having declining revenue or not being profitable, something has to change. And sometimes the easiest thing to do is just shut it down. I do just want to mention, I'd be remiss if I didn't, the company also resolved a whistleblower complaint regarding their accounting. They're going to have to restate some 2017 accounting quarters, but there's actually no material impact at all. But the CFO, who is also relatively new, is leaving the company.